Just help us understand what all of this means. Like, why would your currency come under attack if you're too much leverage, or why is there a, if in the US something happens, why should there be a taper tantrum in India, and why should the stock market fall?
So let's take a step back and think about what we call in economics spillover effects. So the US dollar is considered safe currency, or and US dollar assets considered safe assets by everyone. And why that is so and how long that can remain so is a whole different debate. But the fact is that it's like, if you think a piece of like Cody that used to happen, right? Cody was a seashell effectively, but everyone thought it was worth some money. So if everyone thinks it's worth some money, it's worth some money, right? So it is what it is. Now, occasionally what happens is that if, say, as a country, and this is what we did in 2009-10, we effectively doubled government salaries. So they went out and spent. They bought a lot of cars, they bought a lot of houses, the economy did very well. But if you think about India's economy as a black box, if you're just printing money and giving it to people for free, for a while it feels very good, but what it starts to do is that it starts to create external imbalances. This is what is called the current account deficit.
Right.
So what is the current account deficit? That you are consuming more than you are producing.
Right.
Now think about it this way, in a black box, you are printing money and consuming, so your consumption is going up, but your production is not going up by the same quantity, and therefore your current account deficit widens. Now you need more dollars. Where do you find the dollars? So you start borrowing.
So why does the current account deficit widen when you do this?
So suppose the economy has $120 of consumption,
right,
and $100 of production.
Right.
So there's a $20 current account deficit.
So you're importing it from somewhere basically.
Yes. Yeah. So because we import oil, we import gold, because a lot of these things we don't have. Now suppose you printed 20 rupees and distributed it among people, which is effectively what we did, right? So we increased our fiscal deficit and we distributed it among government employees. Then your consumption has now gone to 140.
Yep.
But your production is maybe 110, right?
Yeah.
Maybe because of that some additional car production happened or something, but net your current account deficit has now widened from 20 to 30.
Right.
Now you need the dollars to fund that. What we fund it with generally is by foreign portfolio investors buying Indian equity. So we are effectively selling our assets to foreigners so that we can consume more than we produce. After a certain time, what happens is that our external liabilities start going up. It's like, if you are in a household, and there we all know of our extended families where people sell their land and consume till the time that they'll run out of land, right? And this is exactly what happened in 2013, that our external balance sheet had international investment position had worsened. We had accumulated a lot of what we call short-term debt to fund our consumption. And so when the US dollar interest rate expectations started going up, so all of this was happening because when the US dollar rates are very low and the US Fed was printing currency, everyone was finding higher yields. So in Indian bonds, you could get better returns in India. So you were sending a lot of money into India.
Right.
The moment the Federal Reserve in the US, the central bank in the US, said that we may start to raise rates now, then all the people who had sent money to India said, oh boy, now it's no longer as viable, so let me start pulling out.
And put money into the US treasury so that I get higher interest there.
Exactly. So at the margin, what that does is now suddenly you're not getting $30.
Right.
And because you had accumulated so much of very poor quality liabilities, you also get into deeper trouble. And then the economy has to go through a very sharp readjustment. So what happens is the currency then depreciates. So we went from 54 to 67, 68 to the dollar. So imports became very expensive, exports became a lot cheaper, and so that adjustment had to be undertaken. And so that leads to a lot of pain. Short term, the economy slowed down very sharply. Interest rates had to be jacked up to slow down the economy. It creates a lot of problem. This is a classic example of when you spend beyond your means, you destroy your balance sheet. So, if you were in 2012-13, when you saw the Indian economy, you said, wow, we're growing so fast. But if you had looked at the balance sheet, you would have said, oh my God, the corporate leverage is going up, bank leverage is going up, the international investment position is completely, in a very bad place, and government debt to GDP was also very high. So, on a balance sheet perspective, you would have said, my God, this growth cannot sustain. Today, you can say the reverse.